Hello friends, welcome back to the channel, and in today's video I'm going to share with you about my small account challenge, and these are some updates. So first thing first, why am I doing this? Actually, the personal goal of mine is I'm trying to see if I can grow this account by 50% within a year. And the second thing is I want to hope that I can encourage more account investors to also start investing towards financial independence. Third is to show that you can actually start small and grow. And lastly, to share my insights along the way. And this is also a personal experiment of mine. So the timeline itself is I started this account from 10,000 on 15 June 2025. And last month value was actually 13,000. So I made quite a bit of few losses on the trades that I did. And in the end, actually the account came down quite a fair bit. And this month, the value itself is actually as of now is 13,581. So there's a bit of rebound. So out of this itself, 828 is rewards credit, and then the rest itself is from my stocks and options trade. And this is actually on the 11-month milestone. Likelihood I might not hit the goal of the 50% mark, but so far so good. I'm gonna learn and progress along the way. So this itself is actually approximately about $250 per month in terms of profit. And in order to get this $250 a month, if you are using a savings or fixed deposit account at 1.5%, that itself will actually require you to have at least about 200,000 in the account. But this account is only started with just $10,000. So what happened this month? This month, I find that the market seems a bit overstretched. So I actually traded much smaller this month for this account. And the whole goal of this account is not to get super exceptional return, but more of like, I'm trying to make things as simple as possible. Hence, you can see that this portfolio generally I use just ETFs and I do very simple trades, and I don't trade more than 4 times a month on this account. So market actually rallied quite a fair bit this few days, and at the same time itself, I actually did purchase some ETFs when the market dipped, and they actually went up by a fair bit also. So looking at this is actually the SPY chart. So the SPY itself has broke resistance, has actually shot up, and right now I think clearly it's already on a bullish trend. But the gut feel itself is that market doesn't really go up in a straight line. So I do think that there will be a mean reversion, but it's quite obvious also that right now this trend itself is clearly a bullish one. So the lessons that I learned this time around is that overbought does not mean that it will become bearish overnight. So you do not want to short the market when the market is in a bullish regime. And if it's a bullish regime, you trade bullish trade. But rather than like sitting out totally because I feel that it's overstretched, trading smaller actually still allow me to make some small profits along the way. Okay, so this is the holding summary, the total assets. Out of that, 11,000 plus is the assets that I hold in terms of the stocks holding. Then the rest itself is actually in terms of cash. So P&L right now, year to date, isn't looking too well because after my huge trading losses over here, the portfolio actually went down quite a fair bit. So right now, there's a bit of underperformance. But however, if let's say today we actually compare the results with the S&P 500 for the past 11 months. So what happened over here is that I actually still slightly edged out the S&P 500 for the past 11 months. So that is a good news. But it seems like that mistake last month was pretty drastic. It actually brought down the return by quite a fair bit. So this was actually the calendar P&L. You see, this is actually the month that I made quite a few trades that actually make losses. Okay, so as of now, in terms of like the current positions, mainly right now, I think instead of like focusing on trading multiple counters, I want to trade a bit more on XSP, just focusing on XSP and doing more net selling of options rather than doing buying of options. So focusing on one counter also will allow me to reduce the chance of making mistakes. And the rest itself, we can see that it's all in ETS with the VOO, QQQM, SMH, EWH, CQQ. Tesla is a free shares. Then of course I still have like the two crypto ETS over here. So noteworthy news right now that we can see is that as of now, this is something that I think is also of a bit of a concern because we can see that the CPI, PPI, and PCE, which is actually the inflation gauge, has been getting higher and higher. So if the inflation numbers are getting higher, likelihood interest rate cuts might not come at all. So it really depends on what are the news going ahead. And if let's say there are not going to be any interest rate cuts, I'm not sure how the market is going to react, but likelihood it will not be that favorable. So this is something that we need to continue to monitor and to see what is needed to be done on this portfolio. So I hope you enjoyed this video today, and if you enjoy videos like this, do hit on the like and subscribe button so more videos like this will be recommended to you. Thanks for following along my journey, and I hope that I can share more insights with you along the way. Thank you.